The Special Retirement Supplement, SRS, for FERS employees. What is it? That's what we're going to talk about today. Hey, my name is Mel Stubbs, and I'm here on behalf of Retirement Benefits Institute to talk to federal employees, specifically FERS employees that are going to be retiring and will be able to get the Special Retirement Supplement. This is extra money that you will get on top of your FERS pension if you retire prior to the age of 62. So if you retire at your MRA, let's say 56 or 57, you will get this extra money all the way until 62, and then it will magically stop. At the age of 62, if you would like to, you can turn on Social Security, but you don't have to. And that's a decision you'll need to make at 62. But this supplement is a FERS benefit. It has nothing to do with Social Security. It is not a Social Security benefit. However, they do use a few calculations that involve Social Security, so that's where the confusion comes from. But this is extra money that FERS employees get if you retire young enough. If you retire under the MRA Plus 10 provision, that is the provision that you retire earlier than you're supposed to and you get penalized. You would not receive the Special Retirement Supplement under that program. But if you retire under the normal MRA plus 30 years, then you will get this supplement. Let's talk about how do we calculate the amount that you'll get. As you can see on the screen, we look at your Social Security benefit at age 62. So what is that amount? You contact Social Security, you get a printout that shows what will be the number at 62 that you will receive. We multiply that by the number of years of FERS service divided by 40. So for a lot of people, they retire in MRA plus 30. They have 30 years of service. That's 30 divided by 40 equals 0.75 or 75%. That means you will get 75% of the Social Security amount that you will receive at 62 should you turn it on. So this will be extra money you'll get up until the age of 62. And for most people, if you're in the 30-year range and you're getting about 75% of that amount, at 62 when you stop getting it, if you choose to turn on Social Security, you will get a raise. Now, the military time is not included. So if you've bought military time back, that does count for your pension, but it does not count for this supplement. There is an earnings limit with the SRS. So if you retire, you get your pension, you get the supplement, and then you go find another job and you make too much money, and we'll tell you what too much money is, you will start to lose this. This too much money earnings test you can see on the screen right now is $18,240. This happens to be the exact same earnings limit for Social Security as well. So if you earn with a 1099 or a W-2 more than $18,000, you will start to lose some of your supplement, and eventually you can lose all of it. What income accounts for this? Not your TSP distributions, not your pension. Only you going and getting a job and earned income would count towards this. If you are a special provisions employee, and if you are, then you know that you are, you have some extra options. You are able to retire earlier. Some people at age 50, some people even a few years before age 50. But let's just say you retire at age 50. You can see on the screen what the MRA is. For most people, it's going to be in the 57 age range. That means for a special provisions employee from the age of 50 up until the age of 57, you would not have this earnings limit, and you can go earn all the money that you want and not be affected by the earnings limit. When you as a special provisions employee hit your MRA, and notice we're talking about your minimum retirement age, not your mandatory. When you hit that MRA, the earnings limit would kick in for you and you would be affected by that. So if you're a special provision employee, it almost benefits you to retire earlier, go work somewhere else. You can get your pension and get the supplement, and it's not affected by the earnings limit up until your MRA around age 57. Here is an example of how this earning limit works. You can see here, if you go get a job for $10,000 a year and your annual special retirement supplement is $9,000, you're going to get the whole thing. If you earn $20,000 a year, that is over the $18,240, and you can see the math there on your screen. You will lose from $9,000 down to $8,120. So there'll be some discounting because you went over the limit. If you earn $36,000, you will have lost all of your special retirement supplement. It's not saying that it's good or right or wrong. If you can earn a lot of money somewhere else, then maybe that's what you need to go do. I'm just explaining the rules to you about this supplement. So to recap, the special retirement supplement is a FERS benefit. It is extra money that you will get on top of your pension. It does not have a cost of living increase every year. When you hit the age of 62, it will stop. You'll have a decision to make at that point about Social Security and what you want to do with that. If you would like to know what your pension will be, what your monthly payment will be, what this supplement will be, then you want to reach out to retireinstitute.com and get a report done specifically for you that will show you what your pension will be, what the supplement will be, plus a lot of other details that you will want to have as a person getting ready to retire. So please check out retireinstitute.com. Until next time, thanks.